The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 21st Fabulous Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call self-control wins the race. Now, can you imagine what it was like to live in the day when it took a month or more to cross the Atlantic? Or how about when you might have had to wait months in San Francisco for a letter to arrive by Pony Express from New York? Or how about if you had to travel over a bumpy road to the nearest town just simply to buy a pair of shoes? You know, today, think about today. Think of all the cutting-edge technology that we have. We can get almost anything instantly. Stop for a moment. Take a look at the technology that we have at our fingertips. Some of you are holding that technology in your fingertips right now, watching this show stream live to you at TFNN.com on your smart device, phone, pad, whatever it might mean, whatever it might be. I mean, live video. Live video. Think about that. Now, if you're listening on the radio, we absolutely appreciate that as well. But technology, think of how that has really changed just so much. Think of all we have access to. You know, someone once said, the faster we go, the behinder we get. I don't know who that chap was, but, you know, let's take a look at the fable of the tortoise and the hare. You know, and in that fable, the tortoise eventually got tired of the hare telling him just how fast he was and challenged the hare to a race. Now, in that fable, the hare stopped to take a nap before the finish line, and the tortoise eventually won the race. The tortoise made up for his lack of speed with an abundance of determination and discipline. The tortoise realized that natural gifts will only take you so far. Think about that in life and some of the folks that you know. Natural gifts will only take you so far. That in the long run, folks, in the long run, using what you have to the fullest degree is the way to attain lasting success. Said another way, it's not what you have, but what you do with what you have that really counts. Like the hare, the best and the brightest often, well, they just simply often resemble some of those beautiful fireworks that dazzle, you know, they just simply can dazzle onlookers with their spectacular display, but they lack the staying power for real accomplishment. I say, be like the tortoise, not the hare. Keep an eye on the goal and your feet on the ground, and you'll be able to go the distance in anything you choose. Yes, we are all tempted by instant success, but history has proven that slow and steady translates into lasting progress over the long term. You know, the greatest things ever done on the earth have been done little by little, brick by brick. How about the great pyramids? And, of course, how about all those great Fibonacci relationships within them? Slow and steady progress. That will build the wonders of your world. Self-control, folks. that will win the race. Let's go check out the race in the markets here right now. Dow futures up about 43. They should have popped maybe about 60 points or so. S&P futures trading up 5.5 right now at 1589. That's the chart we've got on our screen here first. It is the ES Mini. It's the 120-minute chart. We'll peek in on that. We're taking a look at the NASDAQ futures. They are up about 4 points right now. King dollar on the move. That's up 28 ticks, trading out at around 82.37. The euro back a bit. The pound back a bit as well. We'll take a look at the currency market. Goldilocks up $5 right now, trading at $12.91. Silver flat at $19.18. Light sweet crude really flat as well, also at $95.06. A peek around the world here just to see what's going on overseas. Over the pond in Europe, you've got the DAX down 9, the FTSE up 19. They're just simply waiting on to see what the U.S. markets are going to do here, I suppose. The Nikkei was up 215 points last night. We'll take a look at that. The Hang Seng up 119. Up 119, my apology. Down 119. I think it might have been a green candle, so we'll take a look at that stock chart, but it was not up. And the the Shanghai was off 11. Our call-in number, you know it, 877-927-6648. Give us a call. Would absolutely love to take a look at your stock, see what we can do to help you out. But let's start off here with the 120-minute chart of the ES, trading out at 1589.50, just to get an idea of where we went to yesterday when we finally completed the trading session versus when we started off the 9 to 11 o'clock hour. In the 120-minute chart, we've got that descending price channel. That descending price channel takes in this line. I haven't touched these lines ever since I drew them in here. I think I finally drew the channel in right as we were making highs on June the 10th out there. And that's when we really started to cement this descending price channel. And that goes back to the high that was made on May 22nd. So I'm using the open of May 22nd. That price level there is 1664. And the next level that I am using is the open of the session from 11:30 on June the 10th. That price level there is 1632. That forms the top of your price channel. The bottom of the price channel, which you can use here, is I'm using the close at 4:30 in the afternoon on May 16th. That's your first touch point. Your next set of touch points are really the 5:30 a.m. session, the 6 a.m. session, on the open, the 6:30, the 9:30. I'm sorry, the 9:30. That's under 20-minute chart, I should say. So it's really the 5:30 a.m. open. That's at a price level of 1638. It's the close at 7:30's session. That happens to be 1636. And it's the open of the 9:30 session out at 1636 as well. So that really creates your nice little touch points out there. You can see here that even when price broke out to the downside here, and that was really not a breakout, so using that word, when price moved below is probably more appropriate, down below the descending price channel. So it can't be a breakout, or can't be a breakdown if the market's already moving down. In this case here, you did have the market move outside of the price channel. It came back, tested it, went back down below, and then came back inside the price channel. When you come back inside the price channel, what does that set up? It sets up a move back to the top. That's exactly what took place here, coming into the 11:30-ish time frame on June the 10th. And then what do? Just takes that roller coaster ride down, goes back down to the bottom of the price channel at 3:30 in the afternoon on June the 13th. Then what does it do? Rides all the way back up to the top. And then finally we had that breakout. That breakout was the one that gave us the opportunity to look for those Gartley sell patterns in some of the ETFs or whatever it is that you might be trading out there. And that's what we got. Price broke back into that channel at about 5:30 in the evening on Thursday. I'm sorry, today's Friday. Wednesday. And look what happened here. Price moved all the way down yesterday, a hard close, moving all the way down into where else other than the bottom of the descending price channel. Look at that, folks. Now, how cool is that? And then what have we seen here overnight? Well, overnight we've seen a bit of trying to work off the oversold condition. You know that that's the appetite that's out there. We may be seeing a short-term change in trend. You know, we're inside the price channel. Like a dead cat bounce would take you up to about 1604 today. It has not been able to make it up there. And this is important because yesterday we had that VIX. And, you know, each of us here at TFNN use that VIX a little bit differently. Now, that's the cool thing because here's one index that has has so many. It's a multi-purpose index out here. My purpose is always taking a look at the VIX for days above and below 10% changes in one trading session. And what do we have yesterday? I believe it was like 22, 23%, something like that. So we come back from break here. Oh, I'm sorry, we're not on break. I'm on the wrong clock. I was on Tom's clock. I need to change that out here because I did a segment with him yesterday. So I've got 3 minutes here. So we're going to go take a look at that. But in the meantime here, first, what's important for you to be taking a look at here is just simply how important this channel line is and how important it's really been containing price. And I think that's something that you can use in your trading arsenal out here. Now, let's go down to a shorter-term time frame out here. You know, folks, I've put together a special report. It's on the homepage of TFNN.com. You can access it right now. It's called The Trend Is Your Friend Until It Changes. It's really packed with some really great information. Also, there's now a link. There was only a link inside the special report. There's now a link on the homepage of TFNN.com that will let you test drive my service for 2 weeks. Absolutely free. There's no charge to your credit card. Go take advantage of that because there's so much education. In fact, today I even provide additional education that's really a follow-up to that special report out there. I can tell you that I just took a short-term long trade here, and it was outlined really inside the newsletter. Now, the charts hadn't changed just yet, but I've taken a very short-term. Now, I trade the ES Mini, so my stop is very tight, but I just to let you know, just utilizing those techniques, just a very easy trade to have just fired off as we were on the air out there. And so go over, take a look at it. Now, I'm going to go back to the indexes, but I just like to tell folks they know where I'm at. We're going to go. Now, that does not mean that I've changed my outlook. We are still in this is just short-term trading here, and the trend is down. The trend is your friend, and the trend is down out here. So for me, this was just a real simple reward to risk trade to go ahead and take out here. And during the break, I'll go ahead and adjust my stop in another minute or so. But let's go back. Let's take a look at the daily index out here. Let's pull up the S&P 500. I'll share this chart with you here. These green boxes are just simply showing the days a positive increase in the prior session where you've had more than a 10% increase. Now, 8 of the last 11, coming off of the lows here from November, have proven to have a higher close on the following trading session. However, I really think it's important to take a look at the last one. The last one here was on June the 11th. On June the 11th, we had the session where we had just over a 10% increase in the VIX in the early morning hours, or quite frankly, as we were coming on the air, we had a big move in the S&P, the ES Mini, I think it was like 16, 17 points or so, and then we had a sell-off. So the last time that we had this signal that says that the market would close higher, we had a sell-off. Will we have the same today? I don't know. But you stick around at TFNN, and you absolutely will find out. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And so the Dow Futures up about 63 right now. ES Mini trading out at 1593. So an update on the trade. So I don't mind trading a little bit live here with you. And if you're watching my charts here on Tiger TV, you can see I've got the ES Mini. I've got the September contract up here, and I've got really 4 different quadrants that I'm using. Again, intraday trading period. I've got a 15-minute. That's in the upper right. A 30-minute happens to be in the lower left. And in the upper left, I've got that 120-minute chart out there. Lower right, I've got the 60-minute. So, the longer-term chart, the longer-term time frame is the one that dominates what the trend is out there. So that would be the 120-minute chart out here. And there's no change in trend here yet inside the 120-minute chart. Inside the 60, well, that is a different thing. The 60-minute here, really at this moment as we speak, confirming a short-term change in trend. That's to the upside. The 30-minute, well, that is most definitely doing that. That taking place as we're coming on the air at 9 o'clock. And so that is confirming a short-term change in trend. It's the 15-minute here, the intraday, that, quite frankly, and I shared this with my subscribers this morning, we really saw that first change in trend begin last night at about 7:15. Again, that's using this great tool that you can have access to. Just go to the homepage at TFNN.com and download the special report out there. We got another confirmation of it at 12:30 this morning. And then here right now as we came on at about the 9 o'clock session, again, just on the 15-minute chart, gave us the indication that, okay, we were really in this market's going to do three things: move up, down, or consolidate, which is a sideways move. Consolidations will often resolve themselves in the direction they came from. So on the shorter-term trend out here, I'm suggesting that says, okay, it has the opportunity to move up a few. And a few, as far as, so my stop is pretty simple. My stop is below 1586.50. Actually, just put it in hard-coded at 1586 and a quarter out there. And the reward side of this, if we take a look at it, is nothing more than that dead cat bounce. That's that first area. That's that 1604 area. We're at 1592.50 right now. So, we'll see how this trade works out. In the meantime, let's go to Philadelphia and to our man, John. John, thanks for calling. Thanks for holding. How you doing this morning?
Steve, I'm doing very well. Thanks for taking the call. I wanted to ring you and share an observation I've made overnight on the bond market, if you care.
Absolutely, yeah. So what are you looking at? The daily chart, the TLT, the bond? Tell me what you're looking at. I'll pull it up on the screen.
Yes, the easiest thing to look at, Steve, would be the weekly on the TLT. Let me just first tell you, as far as an analytical procedure, I have always 10 years ago, I came around to understanding how the bond market works, or so I believed.
Yes.
And came to the conclusion that doing all my analysis, starting with the yield, the interest rates, is the way to go. In other words, do the technical analysis on the yields, and then I'll do my transposition into the related futures or ETFs or what have you. Anyway.
And for the yields, will you use, what will you use, the TYX?
The benchmark yield for the United States, of course, is the U.S. Treasury 10-year yield. Of course, that's the benchmark off which much of Treasury borrowings is based, and mortgage papers certainly. So I always start looking at the interest rate daily, weekly, and monthly chart pattern. But I first wanted to share this. We all know interest rates have been rising, bonds falling. In the Tiger's Den, for the benefit of your listeners, I posted a couple of charts just for backgrounders. First was the weekly chart for the bond futures into the high in July of 2012. And Larry Pesavento was the one who pulled this up a year before it occurred and said there is the prospect for a top precisely at the completion of a beautiful Pesavento butterfly topping pattern. And It did just that perfectly with all the fib numbers, July 25th last summer, with the bond futures peaking at 153. I then followed up for the listeners in the Tiger's Den, posting the 40-year monthly T-bond futures price chart that showed the rally from the 1981 bottom into the 2012 top. And what I wanted to share with you is not only did bonds peak 153, with the completion of a butterfly topping pattern, but the timing of which, 31 years past the 1981 bottom, 31, think how that relates to the number pi, 3.14, 314.
Yes.
You can't, I'm always just mesmerized and fascinated by how nature's math plays into markets.
Me too. John, do me a favor. Stay on through the break here. I went ahead into the den and pulled up one of the charts here, your chart of the 10-year Treasury note yield. So I think that's where we left off. We come back, we'll get these markets open, and we'll go back to John in Philly. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 91 points, trading out at 14,850. S&P up 11 at 1599. Composite up 10 at 3374. Leading the charge to the upside is Priceline, taking off to the moon again, up about $7, about a little less than 1%. MasterCard up over 1%, up $6 and change. Regeneron Pharmaceuticals up 5. Google up 4. Spread Trum Communications up 4. BlackRock up 329. Intuitive Surgical up a couple of bucks. To the downside, Allegrin, that's a big leader of the downside, off $1.75 right now. Idenix Pharmaceuticals, so here we go again with the pharmas to the downside. You've got ELP. I like that. Electric, Emerson, Lake and Palmer. Anyways, they're to the downside, off about 10% this morning. Questcor Pharmaceuticals, QCOR, they're off a couple of points. Let's go back out to Philly, to John. We're taking a look at the 10-year Treasury note yield. So, Johnny, take it away.
Steve, yes, thanks again. The last chart I posted for the benefit of your listeners in the Tiger's Den is the weekly yield chart on the 10-year U.S. Treasury note.
Yes.
The feature that I'll share is this. First, from the bottom in the summer of 2012 at 1.4% rate up to the current rate at 2.4, we've had a rally of a full 1%. Now, when one looks at that weekly yield chart, one will notice a very obvious feature, namely a head and shoulders completed bottoming pattern with the lows in 2011, 12, and 13, respectively.
Yes.
And just yesterday, with the severe selling Wednesday afternoon after the Fed announcement into Thursday, with the yield on that 10-year paper going to 2.45%, the rate has broken the neckline on that head and shoulders pattern.
Yes.
And that neckline break gives a very simple yet a very powerful projection of a rally in yields of another full 1.0%. In other words, to a target of 3.4.
Right.
And just to put it into context of translating into instruments one we can actually trade, the corresponding projection for the TLT would be down around 99, currently 110. Mm-hmm. And on the bond futures, the equivalent target would be somewhere around 120, currently at the 135 level. So I wanted to just share that interest rate pattern has given a very powerful yet simple signal here this week. And frankly, from a trader's perspective, that's something, Steve, I'm actually going with, not ignoring trading exclusively from the short side.
No, yeah. And so if we take a look at this, and folks, so I've got it up on my, so exactly what John reviewed, it's up on my chart here, so you've been hopefully following along with John. You can see, he's taking a look at the head down here, at the bottom, inverted head and shoulders here, and you can see even from a time standpoint, the nice thing here with these types of patterns, I take a look at this as a consolidating pattern as well, but, time frame, nothing had to be forced here. If you go from the left shoulder, basically, oops, I didn't mean to grab that tool, meant to grab the cycle tool here. If you go from the left shoulder over to the head, you can see you're very, very close on time out here as well. And so John, so we can see a break right now of that shoulder. It gives you the projection at least equal to, what I call the consolidation level. Now, typically, when you break a consolidation like this, and this is a weekly chart, so it's even stronger, what I find is that it'll come back and test it at some point and just confirm that the break was real. Do you look for that as well?
Steve, that happens very often. From a trader's perspective, the way I'm using that is this. If bonds continue to sell down and that 10-year yield rally, on any dip, say next week or 2 weeks hence, that comes down and tests that breakout point, would just be an area that I would actually add to the short bond positions, the long interest rate positions. So, yes, in fact, that's how I'd use it tactically.
And tactically, if it closes back inside the neckline, what will you do?
Then you would be patient, cover those shorts, and acknowledge the possibility that, in fact, that yield breakout is, in fact, not that. So that's the way I'd be handling that. Yep.
Yeah. Okay, cool. Very cool. No, that's great. And so, we'll keep this up on my screen inside the tab, and we'll continue to follow it along with you.
Good. I'll be looking for your week-to-week comment on it, Steve.
Absolutely. Hey, thanks so much for sharing, John. Have a great weekend.
Thank you, Steve.
Absolutely. All right, folks, let's go take a look here. We got the Dow is up at 62 right now. S&P is up 7.5. And let's go check in on some of the commodities. Let's go take a look at Goldilocks, see what gold is doing out here right now. Trading out at $12.93. Boy, Al, I got something in my ear. So we got gold trade out at $12.93. Moving down hard yesterday. You can see here utilizing that relative strength, relative weakness indicator. It's just got to work off a bit of this oversold, or should work off a bit of this oversold condition before it continues its move lower out here. We can see that it really made the 1.272 butterfly, a 1.618 expansion, so you would expect it to find some support out there. But it does look like what gold will do is move down at least into that 1227, 1270 area. Of course, what we need to do is go take a look at the King, at the U.S. dollar index, to get a better feel for what's going on out here inside the U.S. dollar index. Let me pull up that chart. This was a different one. We can see here the U.S. dollar index now moving above the 0.382 retracement, just kind of sliced through it like some of that nice carry gold butter out there. So slicing through that 0.382 says the U.S. dollar index should be on its way up to 83.03. That would be the 0.618 stop, and that's coming down off of the high from May 23rd, that level 84.60, all the way down to the low that was established on June 13th out at $80.50 out there. If we take a look at what's going on inside the Queen, then we'll switch back to silver. As we take a look at the euro-U.S. dollar currency pair, we can see that has already made the 0.382 retracement. It did it yesterday. We had a caller who was in the short trade on that, the EUO, I believe. She was trading. She may have taken some of her profits off the table. What you will normally see, and that's why we want to go ahead and we want to use our Fibonacci numbers, 0.382, 0.618, 0.786 from a retracement standpoint, is because what they give you is they really give you the nice targets as to where the markets will move to. And it's just like an elevator, just like riding an elevator. Just assume you get on that elevator and it's full from a trader's perspective. Once you start to see the reversal, in this case here, we were looking at a nice 0.618 Gartley sell pattern that had formed. It went ahead. Remember, these are ranges, so you know the range target area where you're looking for in order to be able to take the position. My opinion is always wait till you get the confirming signal before you go ahead and jump on board. In this case here, you got a little dark cloud cover candle that came in on June 17th. That was your first signal that this pattern was valid. Market went ahead and pushed a little bit higher. That starts to say, okay, maybe it's not as valid as you would have thought on one candle. That's why you can always wait for a second candle confirmation as well. Of course, we got that real confirmation here on that move down off of June 19th. So you just simply go from the swing point low that's used here, your A to B equals CD. With inside of Gartley, you always have an A to B equals CD pattern. In this case here, that was your April 4th low out at 1.27438 out there. So if you go from that low all the way to the high that was put in on June 18th, that level 1.3414, you can see that the 0.618, that's the green horizontal line going across my screen. It is where folks will go ahead and get off of the elevator, and that's in fact what took place. Now what we'll see here is we will see the euro-U.S. dollar currency pair, and I say we should see the euro-U.S. dollar currency pair make its way down to the 1.30 level, even Steven. Now, what's really important, more so about this chart, in my opinion, is the way that price came off of that C point, the C point that now has been confirmed with that wide-ranging bearish engulfing candle that we saw here on June 19th. Wide-ranging because it went ahead and it took back 1, 2, 3, 4, 5, 6 trading sessions out there, and that was your first sign of some significant strength, that strength there being to the downside. Now, what you really are paying attention to is the explosive move off that C point, and that's really one of the clues out here, which was why I was suggesting to our listener that, you know what, this looks like it's got further to go here. In fact, it is a stronger move down right now on the C to D leg than we had on the A to B leg out there, and that's important. And that says, really, don't expect this to just move down to the 0.618 level. Expect this to go at least down to 0.786, which is around 1.28874. And then, if you continue to see this move down the inside track here, and it's a different inside track than what Basil uses as an inside track, that just gives you more confirmation that you know what we're looking at. We're looking at really a Gartley which is so ideal. You love when Gartley's give you the next C point of that A to B equals CD down, and that takes you into the 1.24 level. So that's what's so nice about. Just make sure that you may be using your own tools at home for your formation of an A to B equals CD. Just make sure that from your A to your B point that you draw that line twice so that you maintain that same angle and take that over and lay that over on your C area. Because we're giving you the nuances here, or I'm giving you the nuances here of how to be able to really get information out of a chart that somebody might just totally overlook. And just even that one little thing that I just shared there, that one little tool, that'll be worth its weight in gold for those of you that trade A to B equals CD and are trying to understand strength or weakness in a move out there. Speaking about weakness, we'll go over, take a look at silver here. Silver right now trading out at $19.92. This is the weekly chart. We can see here that, it's the 1.618 butterfly pattern, the low that came in on May 24th. That low is 2025. Truly looks like that is failing, and that really sets up the longer-term buy at about $17.35. Sets up the longer-term buy pattern, not buy. The buy pattern out there, you'd want to get some confirmation. You'd look for a daily chart. You'd look for a reversal signal. You'd look for things of that sort. But it looks like that is where silver wants to trade down to. If we take a look at light sweet crude right now, we got light sweet crude here getting back into, looks like, let me refresh this chart out here. Let me just make sure. Looks like we've got light sweet crude. There we go. Really trying to get back inside that descending price channel, saying that move topside here was false. And when you get back inside a price channel out there, well, all you have to do is go take a look here at what just happened with the 120-minute chart on the ES. We can see we had a false breakout here. Once price got inside there in post-haste terms, it went all the way down to the bottom. Now, 120-minute chart channel, totally different than a monthly chart out there, but that's something that we want to most certainly keep an eye on. Likewise, if in fact price does not get back inside the channel, it's doing what it's supposed to do from the upside. Just like the question that I posed to John with regard to how he uses the neck lines, channel lines, breakout lines, consolidation lines. Oftentimes when you break out of something, you come back and you test it. That's what we saw take place on the 120-minute chart of the ES. In this case here, we're seeing that take place here in light sweet crude. If it comes back and tests it and does not get back inside, it says, and this is a weekly chart, says that breakout may have actually been real. In that case there, you would then all of a sudden see light sweet crude eventually move up to about the $108, $110 level. 110 is going to take you back to the March 2nd, 2012 time frame out there. So that's how you would use those charts. If we go take a look here at what's going on around the world, let's do that. Right now, we'll take a look in at the FTSE. That has been really struggling out there. Let's go see it's trading towards the bottom of its range here right now. It's got a trading out at 61.68. Broke that hammer candle from June the 13th out there. Says 6,090 is really its first target here, but it's trading below that 200 period exponential moving average. So that is a short-term bearish for sure. This thing 10% off of its high. That takes us back into the time frame of May 22nd out there. Really what this looks like to me is 58.77. That's easily game. And most likely inside the FTSE, getting back to the November 16th low is really what it looks like its target is out there. Let's check in on the DAX, see what the DAX is doing here today. Right now you got the DAX is actually, is the daily chart? Yeah. So the DAX is trading a little bit lower. The DAX is getting below the 0.382 retracement level. When you do that, the DAX has let some passengers off of the elevator, and now it's going to go down to the next floor. In this case here, this is an elevator on the way down, and that next floor is a price level of 75.64. At 75.64, that's going to take us into the set of swing points from April. In fact, let's do this here because the retracement levels we're looking at are off of the November lows. We also have some nice swing points here back in April. Let's go from those lows to the high put in on April 22nd as well. So you can see the 618 level just below here on the shorter term time frame, about 78.53. 877-927-6648. Dow's up 83. S&P's up 11. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Right now we've got the Dow's up 41, S&P is up 7, NASDAQ just slightly green, up 70 cents, Russell 2000 up a couple of points out here. Let's go check in on some of these stocks here that are moving and grooving in the marketplace. Let's go take a look here at, let's see, to the upside we got MasterCard. So let's go see what MasterCard is doing. MA is the ticker symbol, up about $4 and change. Let's see if this had any damage in the sell-off yesterday. Now, very strong equity out here. In fact, as we take a look at it, I must have been taking a look at a consolidation range out here inside MasterCard. That's what this yellow box here was taking a look at. So, earlier, if you were listening, we were taking a look at, John, we were taking a look at the 10-year interest rates out here. Again, consolidation levels, I'm taking a look at the consolidation, in this case here, off of the January 2nd gap up. Seemed to be consolidating sideways here for a bit. The bottom of it was that gap. The top of it was the bar from April the 1st out there. Once price broke above that level, which it did on April 30th, that set up the projected price move out here. And that projected price move, as we can see, took us right here to basically the very top being that little shooting star candle on June 19th out here. Let me explode this up a bit, see if we had. No, we did not have a island reversal, but this got up to a price of $591.89. Did it with 766,000 shares. A little bit of volume off of the top, nothing too substantial. 921,000 shares to the downside. Not really that big of a deal. Today, so far, an inside day out here. I say not a big deal because on June 13th, which is the bar it was trading into, 860,000 shares out there. So MasterCard still looks pretty good, pretty much intact out here. And, if this thing were to pull back and get down into the bottom of that consolidation, that gap up area from January 2nd, do it on less than 1.2 million shares, that would be a nice buy for you. Let's take a look here at what is moving to the downside. You've got Oracle. Okay, Oracle is off 9% here this morning, so that's putting some pressure in the markets. ORCL is the ticker symbol. So let me refresh this chart here because that does not look fresh to me. So Oracle is trading, maybe it gapped down, it's trading at 30, yeah. Well, I guess so if it's down 9%. So gapping down at the open. Let's pull this stock chart back here. Give me a moment to just get rid of everything and refresh all this stuff all together. Let me do that one more time. So we got Oracle here gapping down, taking out a B point, and let's see if it's doing it with volume. That B point that I'm looking at, or swing point, is March the 25th, 39 million shares to the downside, and the low is 31.16. So you gap below it this morning. Only been trading here for, 27 minutes, and in that 27 minutes, it's done 52 million shares. Yeah, I would say it's taken out a B point with volume that only had 39 million shares. So now let's go take a look at what that A to B equals CD down projection in Oracle will move down to. Give me a moment here to pull this back. You can see it's, in essence, gapped down and made that 1-to-1 price projection of $30.04. It's also trading into a set of swing points back here from November. How about that? So this is already back to the November 16th area and did it in a heartbeat. Did in one trading session. Of course, it had first given you a significant sign of weakness, and that was back on March the 21st out here. Let me just delete everything off the screen here again, and what we'll do is if you take a look at this equity here and how it broke down, you would come all the way back to the trading session from March 20th, 2013. There were 40 million shares there. That's not the benchmark necessarily that you would use, but let's take a look at it. As price moved back up there, did it on 19 million shares. Now, that's how you like to see something coming back to a breakdown area. Folks, it is Fantastic Friday. If you're off to start your day, have an incredible weekend, and I will look forward to seeing you tomorrow morning. Otherwise, stay tuned for the Nadex Bull Bear Binary Option Hour. Daryl Martin and myself will be up next. Take care, folks. Have a great weekend. Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.